Hey guys, what is happening and welcome to this video. So in today's video we are talking about the 70s and specifically what happened during the 70s, what we can learn and relate to what is exactly happening right now, guys. So without further ado, let's do this. Alright guys, welcome back. So during the 1970s, obviously inflation absolutely got out of control, and I believe we're seeing a similar thing play out right now. Now, part of the reason that inflation got so out of control was because commodity prices went up so much. OPEC was restricting the supply, much like they're doing right now, pushing the price of oil up, pushing the price of everything up, and it was an absolute economic disaster. And the reason this happened was a multitude of things, partly the US dollar being took off the gold standard, the exuberant government spending at the time, and there were a lot of different things that were blamed for that. And if you look right now, we're seeing those exact same things happen. We're seeing the US is getting into tons and tons of debt, just spending loads of money. Now, I just want to tell you something, because you have to be smarter than just reading the headlines, okay? When it comes to the Saudis, a lot of them are predominantly Muslim culture and they don't believe in debt. So the fact is that these countries like America are getting into so much debt and they hold tons of US dollars because of the petrodollar, that it means that their money is being devalued. They don't like it. Fact is, Russia, China, Saudi countries, Nigeria, all the big OPEC producers are forming their own deals outside of the petrodollar, and that is starting to ramp up. And we are really literally seeing the US dollar just being torn to pieces in front of our eyes, and people can't even see it. You go to the gas station, look at the price of oil. That going up is a signal of how much the dollar is going down in real term value. And the thing is, it's just going to get worse, guys. Like, how many analysts now are calling for $100 a barrel? I've heard $250 a barrel. I've heard $150 a barrel. Now, $100 a barrel oil would decimate the entire economy. I mean, Canada used to actually benefit from oil production, but because of governments coming in and saying, you know what, we want to go net green and everything like that, banks don't want to invest into the oil sands here in Alberta or anything like that. So there's not going to be another oil boom. That's not going to happen. The one thing that is clear to me is the oil prices are going to continually go up, and that is going to push consumer prices continually up. Now, there's certain analysts and government officials are saying that we've seen the top of inflation, which I just believe is absolutely insane. And I can't believe that they can even say that. But the fact is, when we look at what's happening right now in the economy, we have to be smart. We have to read between the lines. We can't read the headlines and just make decisions off that. We have to protect ourselves. And I'm all about protecting yourself. You know, I myself buy gold and silver. We have a lot of gold and silver that we hold in a vault here in Calgary. And the other thing that I'm doing now is I'm buying mining stocks. I'm getting into mining stocks because those things, I believe, are going to go up in value massively when we see this hyperinflation type scare. And gold and silver led the way. I mean, let me give you these stats and then you'll just be like, what the heck? Gold prices went up 400%. And silver prices topped out at 740% in the late 70s. So they went up tremendously on this massive bull run, which was just insatiable. And after the early 70s and when government spending ramped up, their prices declined exactly like we've seen so far. Silver and gold are currently sat not at the best prices, you know, they're lower, which I believe is cheap. So I see the prices that we're getting right now as a complete discount, and I apologize for the siren. I have no idea where it is. It's been going off for like 2 minutes now and I paused, but it just keeps going. The thing I want to highlight to you is after what happened in the 70s and the recession hit, we saw interest rates hit that 4.5%, which was extremely low back then. And literally 2 years after the interest rates bottomed out, they were back above what they were before. So literally there was only this 2-year gap when they were that low. And I think we're going to see a similar thing play out right now. It looks like it. Just think about it, guys. 2 years. We've seen interest rates were bottomed out around May 2020. Next year, they're planning on raising rates, mid next year, if they can even hold off that long. That's 2 years, guys. And rates just did not stop going up after that. And it absolutely decimated people who were in debt. And right now we have an economy that is totally in debt. And the interest rates, they topped out around 20%, which is just insane. We'd never get to that levels. But we've gotten a lot lower this time. And the fact is there's so much more debt. We don't even need to go that much higher to actually just start bankrupting businesses and homeowners. I mean, literally, guys, you have people now, you have this mentality almost built. 1 in 3 people who are buying a home, they do not sell their old home, they rent it out. They become a landlord because they're like, property prices are just going to keep going up. So what they do, they refinance that home, they get the down payment from that home, suck it out into another home. But what they've essentially done is leveraged on leveraging. And it's just unbelievable that the Canadian banking system has been allowed to do this for so long. I think this will be the just killer of the housing market ultimately. You've got property hoarding right now, which is just an all-time historic high, property hoarding right now. And that is why inventories are so low and everything like that. People are going, the prices are just going up, so I'm going to hold on to it. I'll become a landlord instead. And it's like I've said to you guys before, at the end of the day, it's very easy to hold psychologically when prices are going up, but as soon as they start to turn and come back down, especially if you've got a down payment that is in your equity, you are going to be seriously worried. So people are dancing on fire at the moment, and it will backfire, and we can protect ourselves. The only things that I personally am doing right now is buying silver and gold and mining stocks. I'm diversified enough. I've sold most of my ETFs and everything. I sold them this year. I only had 25%. I've sold the tops multiple times over the past year. And you could have said, Luke, well, you could have held those, but I weigh it up as risk. Everything is risk for me. What is the risk that I'm taking if I do hold this? The chances of it going 10% for a chance of going down 50% is just not worth it to me. And that's what people don't understand when they're investing in property, is you're buying. It's like buying a stock at all-time high. If you buy a stock at all-time high, yeah, like Tesla right now, you could have bought it yesterday and it's gone up 6 or 8, 10%. But then in 4 months' time, it could have gone down 50%. And I think we will see huge corrections in equity markets and things like that. But anyway, guys, it was just a little bit of a video that I wanted to do just based off the 70s and what I think we're about to see. I hope this video was helpful to you. I'm not a financial advisor. Don't go rushing out buying mining stocks, silver and gold, or anything like that. I urge you to do your own research and operate within your own comfort zone. I've been investing for a long time now, so I'm very comfortable, whereas most people, they came in 2020 and they've only been investing since 2020, which is just a disaster in itself, and we should talk about that and the passive investing thing in another video entirely. So anyway, guys, I thank you for watching. Take care, peace and love. Bye-bye.